What's up, my people? And of course, welcome back to ZFX about Mentor. In today's video, guys, I don't want you to recreate about Forex strategies. In today's video, I'm going to expose something that will change your trading career, okay? So if you're new to my channel, please don't forget to subscribe. Of course, hit that notification bell so don't miss most of my videos. And don't forget, this video is being sponsored by Xness. Check my description there. And of course, open yourself a trading account with Xness. Check my description. You'll find my contact if you need more of my help. And of course, you'll find my Telegram group. And of course, join the trading group, man. Thank you so much. And don't forget that you can become funded as a trader. You'll get to know about that next if you check on other videos. So thank you so much, guys. I'm going to be teaching you something which is very important. And remember, when I'm teaching you something, when I'm doing this analysis, the same thing that I'm also expecting the market to do. So you can also base on your analysis here. So from today, we're expecting JPSD to do this. Okay. Now let's get straight away. So the first thing when it comes to analyzing a market, guys, is I want you to know about the flow of the river. As I told you, the flow of the river is the trend. Rule number one: when you start trading, the most important thing that you need to do is you need to first look at the flow of the river. Okay. Now let's go to H4. The first thing that we can see and we can really see with, and you can only use your eyes. That's why I always told you a very simple strategy: trade what you see, guys. Only trade what you see. So you can see that it's a bullish momentum. It's a bullish trend. Okay, it has been buying. It has been buying, and you don't want to trade against that trend, regardless of what. Now let me teach you something about the market. It can be a bullish market, but of course there are circumstances that price can retrace, okay? And these are trap zones. We call them trap zones. Make sure you understand everything, guys. These are trap zones. Now the market is full of manipulation, and all you need to do is sit down and focus. Now let me tell you how the market works. You don't need to panic. Imagine you say that let's say you're in a class and the teacher says that what is 1 + 1? And for you say 2, and the teacher keeps telling you, are you sure? Of course you have to say 2. Don't panic. It's just like the market. Stand on your analysis and wait for it. As long as you're using pure price action, then you need to be patient. You need to wait. Okay. Now let's get straight away to what I'm telling you about, guys. Now the first thing is we have agreed that yes, the trend is bullish. Then okay, the trend is bullish. So what? Now if you look at JBP/USD in H4 time frame, what you need to do is you mark your peaks. The highest peak reached by the market is that peak. And if you look at this peak closer, let me kind of zoom out. If you look at this peak closer, make sure you check the whole video because you'll thank me later. Let me use that. If you look at this peak closer, this peak here, let me kind of zoom out. There's something so nice about that. Look at these candles here in this peak. These are candles. These are railroad tracks. Railroad tracks are candles that are of the same shape and size. You get that? Sometimes railroad track indicate indecision in the market, that they could be a change of trend, or just it can either be a small trend or the real trend of the overall trend. You get that? Or just a retracement. Hope you've understood that. So you would see those candles very important at that point. Okay. Then if you look at then the next thing is you mark your support and resistance point. Now, what are support and resistance points? When you see the market moving up like this, it is bullish. Yes, market is moving up. Where the market gains more momentum to push price to the next high is our support. So you look for your major support. I say it again, there's what you call major and minor support. Make sure you watch all my videos if you want to understand this. Then these are your resistance zones because they're resisting the trend. The trend is bullish and they're resisting the trend. Now let's go. So let me mark a few of them. The most important one is this one. And you're gonna ask me, why am I marking that as my key resistance point? It's a very simple thing. Now, when you see that, I told you one thing is that when you see the market repeating the same point over and over again, this one becomes a very strong resistance point. It's just like the market is repeating, the market is touching the same price and it is respecting that same price. That one becomes a very strong, significant resistance point. Okay, or it can also be a strong support point. You understand that? Now let's move on. Now if you check on this, we have marked that. The next thing that I want us to do is let's go and check on the candles, the last week's candle. Last week's candle, we try to understand the market. Last week, we really saw that the sellers were very strong in the market. Basing on this type of candle, you can see this candle here. Sorry for that, just a moment. Look at this candle here. This is a bearish candle. What does this imply? The sellers were dominating in the market. You get that? That was last week. Now, let me tell you one thing. You can also predict the future markets using high time frame candles. You get that? Because if last week we had a strong bearish momentum, then this week there would be also a chance, a high probability that buyers, sellers could still be dominant in the market. As simple as that. Now, guys, let me show you something very unique about this market. Now, in high time frames, I want you to realize that it is also very important to identify the structures of the market. Let me tell you why there is a lot of money in high time frames. It's because the dealer knows that most traders are never patient. Now, if you look at this, I had even marked this price long time ago. If you could see that, you could see a head and shoulder. This is inverted head and shoulder in what? In the weekly time frame. It is like this. You get that? That is how it is. I hope you've seen that. An inverted head and shoulder. You get that? Because you can see this. These are your shoulders. These are your shoulders. And this is your head. You get that? So you could really see the structure in the high time frames. You would see the structure in high time frames. That is an inverted head and shoulder. Now, I'm going to give you my overall view on JBPSD if you're going to be following this. And you also keep following it, and we see what the market is going to be doing. Now, let's go to H4 time frame. We find our entries and significant levels. Okay. Now, if we come to H4 time frame, I think we studied the daily time frame. We studied the daily time frame. Yeah, we studied the daily time frame already. You would see in the daily time frame, it's also an inverted head and shoulder, which is a very, very, very big one. You understand that? Now, what we really confirm is JBPSD is at a very sweet zone. Let me tell you, it's at a very sweet zone and a very confusing zone. Okay, anything can happen. But let me first show you H4 time frame. Why I'm saying we're gonna be expecting this. Now, if you come to H4 time frame, there's what you call if I've been always talking about the thing, bearish flag and bullish flag. I want you to see how the market is trending here. I want you to see this channel, how the market is trending here. You see that? I want you to see this. Now, if you look at, just like, let me tell you one thing. We have this. It is always important to trade what you see. This is a channel, okay? This is a channel, okay? Now, after a bullish, very strong momentum, price moving up, and we have this type of channel, this could be as a result of a continuation of a bullish trend. Okay, but one simple thing that I myself, as I know as a trader, is it's always unique and important to trade what you see. Now, what I expect in JBPSD as a trader is I'm going to be expecting this. Let me show you. Okay, sorry for that. Let me show you. You see, I drew, sorry, let me draw it again. I draw my channel again. You get that? So why I want you to ask yourself is that, why is price bouncing around the same point? Why is it moving in a cylindrical way? Okay, and it's following the same canal. Why is price moving that? Sometimes when you see price moving that way, it's trying to collect orders. It's trying to collect orders from traders. You get that? Now, if I try to zoom out this point, let me try to zoom out this point. If I try to zoom out this point, and I mark the, okay, let me mark my low. This is now my low, my mean low. I call it mean low, not because it's not the major low. I call it mean low right now. And I go to H1 time frame. Let's go to H1 time frame together. Let's go to H1 time frame together. And we see what the market is doing. Now, what we expect the market to do is this. You can see how sweet it is in H1 time frame. It's all about you being patient here now. You get that? We are waiting for a break in this canal. We are waiting for a break, market to break this structure. You get that? Now, when you see the market breaking this structure, that is when you can react and take part in the market. That's when it is kind of more safer. Not even kind of, but there is a high chance that you would profit in the market. Now, let me tell you the truth about Forex market. It's all about waiting. Now, when you've marked your charts like this, and you have a possible solution, like you're expecting something, you have to wait for it to happen. You don't need to rush. You have to wait for it to happen. You get that? You have to wait and be patient for it to happen. The same way anything could happen, it could also break to the downside, okay? But according to me, the chances of breaking up would be more high, okay? You get that? Why? Is because this is a continuation, a result of a continuation of a bullish trend. You get that? A result of a continuation of a bullish trend, because you would see the market very well was bullish, okay? Then suddenly we have this, okay? You get that? And we had our major support level, which is here. Okay, and that's where prices bounced it from. And we're expecting price to respect this zone. You see this zone that I've drawn here? This is where we're expecting price to respect. Okay, so what do we really do as a trader? Now, since we marked our tip in the market here, price could move back up to the tip of the market. You get that? We call it the source, where the current, where the former price was. That is the source of the market. You get that? Then if we go to the daily charts, I would always have one thing that I'm advising you guys. And I've always told you, you always be patient and wait for your time. If your time has not come, then don't trade. So this is what I'm expecting, but it only takes patience as a trader to wait up to this point. So guys, if you feel you've learned something in today's video, please leave a like and leave a comment. And don't forget to join my Telegram family. Let's trade together and let's get funded together and let's win together. Remember, we have also challenges of growing small accounts. I wish you all the best. Please, I'm waiting. Let me know where you're watching from and let me know how this video helps you. And of course, let me know if you have any query and you have the video you want me to, if you have any suggestion about the video you want me to make, please don't forget to leave a like and leave a comment about that video. I wish you all the best, guys, and see you next time. I'm going to be ending this recording. See you next time, guys, and bye.